Let's also talk about earnings, and let me welcome on board Inder Jaisinghani, CMD at Polycab, and Gandharv Tongia, the ED and CFO of the company, joining in on the show right now. Gandharv, hi, morning. If I could just start off the conversation with you, you've reported a good set of numbers. Tell me what aided the growth, and do you expect the momentum to continue? If you could just share your margin guidance for FY26.
You are right. This was the best year as well as the fourth quarter in the history of the company. On an annualized basis, we crossed 22,000 crore rupees of top line with a profitability of close to 2,000 crore rupees. As far as the fourth quarter is concerned, the top line was 7,000 crore rupees, which was highest ever. And the profitability also has improved considerably. The growth was seen across all the verticals, cable and wire, FMEG, as well as EPC. Your question was guidance for the future. If you recollect, in the last quarter, the board had approved our 5-year transformational project, Project Spring, wherein we have given guidance for all the businesses. I'll probably call them out one by one. The core cable and wire business, we believe that we will continue to grow at 1.5x or 1.5 times of the industry growth. This industry has in general grown between 1.5 times to 2 times of GDP, and that is a type of growth which we are envisaging as far as cable and wire is concerned. The exports business, which is very important for us and has started contributing almost 6% to our top line, will gradually go right up to 10% in 5 years from now. The FMEG business will continue to grow at a very good rate with a profit target of between 8 to 10% in 5 years. And EPC business will continue to contribute to the business in the vicinity of 5 to 10%. So that's the overall target, and we will continue to invest in the capacities. We will pump in 6,000 to 8,000 crore rupees in the next 5 years to meet the demand and help in building the nation.
Right. Gandharv, how did the company manage to surpass its FY26 revenue guidance of 20,000 crore rupees by achieving more, 22,000 in FY25 itself, and a full year ahead of that schedule? Tell me, what will be the FY26 revenue guidance then? I'm sure you're going to be revising it upwards.
As I mentioned a while back, that we are working on a transformational project. In fiscal 21, we started the first project, which was Project Leap, under which the target was to get to 20,000 crore rupees by fiscal 26. All thanks to support by our customers and other stakeholders. You are right. We have been able to achieve that ahead of time in the fiscal 25 itself. And as far as the future is concerned, as I alluded a while back, under Project Spring, we have already given our guidance, and we believe that we will continue to grow at a rate which is going to be better than the industry growth rate in the years to come.
So, Inder, with major players recently entering the entire W&C segment, wire and cable segment, do you see rising competition in the industry? And what are the strategies Polycab will adopt to navigate this competition and ensuring that the market share is not damaged?
Basically, market is growing and building construction line is more than what is regularly other items are growing. And new players will come. Definitely, little competition will be more increased. So profitability little going to be down. But we got a big range. So we are not only dependent on one wire, because big range is going to give us ultimately to the maximum share from the customer. New customer is going to come. Unorganized sector is going to be little difficult for them, but new people will come who will organize, will be I think so market will grow accordingly. So we are not worried about that.
Gandharv, Q4 FMEG segment achieved an EBITDA break-even in the quarter gone by. What is the strategy and outlook to drive profitability and margin expansion in the segment for FY26?
You are right. After 10 quarters, we were able to get to a break-even or a slightly more profitable FMEG numbers. This is a result of a transformation which we initiated almost a couple of years back. We have done a lot of work both on the sales side, GTM, product innovation, A&P spend, brand positioning, as well as our internal organization. As a result of that, the top line growth and FMEG bottom line growth is very impressive. And we believe that in years to come, we'll continue with the profitable growth in FMEG business. As of now, the current thought process is that FMEG business should be able to grow at 2x of the industry growth rate, and we should able to get to 8 to 10% of EBITDA margin in this business in 5 years from now.
But Inder, when I see your export business, that is currently contributing 9% in your top line. What's the long-term export strategy that you are working with, and which geographies are you focusing on? And does the tariff uncertainty, any indications of impacting your export business in the times ahead? What are you getting to hear?
Export business have a little good margin, but we are now covering only USA, Spain, and Australia, and some countries where we are supplying all oil and gas refineries. But slowly, now we are going to catch every country of the good country, which is where we see that demand is there, because every country is importing cables. So we want to see that now it is a good chance. The basically respect of the India is now, which we are feeling very good. So we are going to catch a maximum market, and we want to create a separate sale in the organization, which will be only export division, will be total focus on the export, trade market, OEM market, and EPC market. All type of market we want to create a separate team. And now this coming 5 years, we want to see that we should at least reach 10 to 12% by overall growth, but of the overall turnover.
Right. Gandharv, recently one of your peers announced a major capacity expansion. Do you have any capex plans, and what is going to be the capex for FY26 as well as the next 5 years?
You're right. We are investing a lot of money. In the year gone by, we invested close to 950 crore rupees. 5-6 years back, this number used to be 200 to 300 crore rupees. As you have seen that our revenue CAGR is in mid-20s, and that requires us to make more investment in the form of capex. In the guidance which was unveiled in the last quarter, we have called out we will invest between 6,000 to 8,000 crore rupees over the next 5 years, and we will ensure that we have capacities available to meet the demand as well as increase our market share in cable and wire industry. The another form of cash utilization is dividend. Last year, the dividend payout was around 30 rupees per share. This year, the dividend payout ratio has improved, and yesterday, board has approved dividend payment of 35 rupees per share. So we will continue to generate cash and utilize it both for the purpose of giving rewards to the shareholder by way of dividend, as well as putting money where it is required, which is in the form of capex in years to come.
So, Inder, how is the company order book, and what is the book to bill ratio, and how is the FY26 order pipeline, and where do you see major orders coming from?
Yeah, basically there's a huge demand in the women sector. That is basically electricity board, solar park, which is coming huge. Private also coming huge solar parks. So green energy is giving a huge business. Railway is giving a good business. Electricity board is giving good business. And everywhere demand is good. Even building construction demand is good. So we got a regular, we got an order, and electricity board, we got an order of at least 3-4 months continuously. And regular inquiries also, which we are keeping ready stock, that demand also is good.
Right. Gandharv, and tell me about the volume growth in the fourth quarter. What is it that you clocked?
So the top line growth is essentially of both volume as well as value. Volume growth in the fourth quarter was in mid-teens, and the balance was because of the change in value. And that is why we were able to register the best quarter as far as the company's history is concerned, close to 7,000 crore rupees.
Right, gentlemen, both of you, thank you so much for your time today. Good luck once again, and congratulations on those earnings.